You're watching BloombergQuint, and here we are continuing to try and decode the 11,000 crore scam, as it's being called, that has been disclosed and detected by Punjab National Bank. News came in on Wednesday, and we're still trying to understand how this actually happened and perhaps talk a little bit about the correctives that may need to be put in place. Joining us to talk about that is former RBI Deputy Governor, Mr. R. Gandhi, and we will also, of course, bring the conversation right here back into the studio too. But before I introduce my guests formally and get you a sense of what we're going to be talking about, let me first go across to Vishwanath Nair to just tell us what has happened so far, what we know so far of the modus operandi. Vishwanath, over to you.
Right. So, Ira, essentially, it's a very simple process in this modus operandi. That is what has come across in the complaint that was filed by Punjab National Bank with the CBI, as well as the later clarification that the bank has made. So, essentially, let's get on to this. The borrower in this case it's Nirav Modi and his companies. They approach an officer at Punjab National Bank's branch in Mumbai. It's the Brady House branch in Colaba. They approach him and seek some form of an LOU. Now, this PNB officer then issues this LOU without actually the bank coming to know that such an LOU actually exists. This is, at this point in time, what the bank calls it an unauthorized and fraudulent letter of undertaking. This letter of undertaking essentially is a commitment that Punjab National Bank is making to a foreign bank or the foreign branch of an Indian bank, saying that this customer, whoever this LOU is in favor of, is a genuine customer, and that in the event of a default, Punjab National Bank will pay them back. Depending on this letter of undertaking, the foreign bank actually approves buyer's credit, which is credited to the nostro account that Punjab National Bank has with these banks. It's a foreign currency account. From that nostro account, the supplier, whoever this borrower, in this case Nirav Modi, deals with, that supplier gets paid off. They transfer the goods to the borrower. The borrower essentially, typically, and because this is the gems and jewelry segment, is a person who creates jewelry. So they import the raw materials, they create the jewelry, and then they export it. After exporting this jewelry, whatever funds they get, they pay back this foreign bank, and then the LOU, essentially this buyer's credit is exhausted, and then the whole cycle continues as it is. So this is what we understand from the segment, from the disclosures that have come in from the complaint. Essentially, the fraud is in this part of this chain, wherein the bank does not seem to know that such a letter of undertaking has been issued. The customer, as the complaint pointed out, does not actually have any credit facilities sanctioned by the bank. There is no funded or non-funded exposure that the bank has towards this customer. Therefore, and because the bank doesn't know that such an LOU exists, essentially it's a liability that Punjab National Bank wouldn't know about. So in case there was ever a default, then PNB would be hit with this sort of liability without it actually knowing that it was supposed to pay back this foreign banker.
Right, and this is probably how it went on for a few years. Let me now welcome in and introduce Mr. R.K. Bakshi, former ED of Bank of Baroda, veteran banker. Thank you so much for joining us on the show, sir. I want to first ask you, this sort of flow chart that Vishwanath drew out broadly, is this the way this entire buyer's credit system works? Are we correct on that?
Yes, this works according to in this manner. The only correction that I like to make is that the undertaking is an unequivocal understanding, and it is not that bank will pay in case of default by the buyer. Buyer doesn't come into the picture. It is opened on his behalf. That is a transaction between the originating bank, which is PNB, and Nirav Modi, that they will get the money from Nirav Modi and pay to him. But the commitment to the discounting bank is unequivocal, that on such and such day, without any dispute, demur, anything, we will pay you this amount. From where we get the money is our...
Okay, and that commitment is on, in this case, Punjab National Bank.
Exactly.
All right. Mr. R. Gandhi is joining us via Skype. Mr. Gandhi, thank you so much for joining us. Let me, sir, first ask you for your first thoughts. From what you have read so far, is it surprising to you that something like this could have gone on since 2011, and that the scale of money linked to these LOUs would be as large as 11,000 crores, sir?
Yeah, that's true. If it is true that the whole fraud had taken place right from 2011 and it remained undetected this long, that is definitely a nasty surprise. So we need to have more information about that veracity of that position. So the amount that is being so high, that is because over the years, if it had started in a small number to begin with, and every year they got increased in other thing, so that in the normal course that would have been there. But had it happened from 2011, then it is a nasty surprise. I would definitely be worried about it.
Mr. Gandhi, one of the questions that everybody has asked us, and we don't have the answer, but I know that you will have the answer, is that is it possible for somebody to enter something into the SWIFT system manually and for that not to get reconciled at the bank end? Someone in the morning said that the RBI doesn't actually require that. Is that true, sir? And isn't that a big loophole?
No, it is not that RBI rule applies there. That a standing instruction or a standing procedure under SWIFT also. Typically, maker checker check and control should have been there. And end of the day, reconciliation, the messages that are being sent, and there should be a back office unconnected with the operating unit, which should be checking the messages and reconcile it. So that is all standing instruction relating to a financial transaction. So if, as they had mentioned, that somebody fraudulently issued that SWIFT message, there has to be an auditing team which should be checking that. Because normally these messages are 100% audited end of the day or next morning.
Okay, I'm just going to go back to Mr. Bakshi. Mr. Gandhi, stay with us. Your old friend Mr. Bakshi is with us in the studio. Mr. Bakshi, how does it work? If I am entering something into SWIFT, what happens at the bank end, in terms of reconciling to ensure that the contingent liability that may be generated is reflected in the books?
So as SWIFT is a stand-alone communication message. Ideally, it should be integrated with the core banking. SWIFT is a very old system. Core banking came much later. SWIFT has been there. At that time, manual systems will be there, but there will be an authorized signed memo given to the SWIFT operator to enter a particular transaction, which will be issued by the credit department or the originating department who is authorized to do it. And on that basis, they will. But if anybody, ultimately, SWIFT system recognizes only the entry operator and the authorizer. It doesn't know whether it is being done on the basis of a memo or you're doing it fraudulently. SWIFT will not authorize. But the gap, there were two major gaps in this. One was that SWIFT was not integrated with the core banking system, and therefore, if it were integrated, suppose they are issuing a $10 million LOU, it should first be generated in the core banking and then it should go to the SWIFT, in which case a contra liability of voucher will get passed in the system. Next morning, the bank will come to know that yesterday my liability under LOU in the balance sheet were only 2 crore, how it has become 62 crore this morning. So they will check on that. So that was not done, but that was because their IT was not upgraded to that extent. But the second thing which is surprising, and Gandhiji also just mentioned, the total log of all the messages that are gone, some independent officer must verify them, what are all the messages gone. Because you cannot depend just on the two persons who are manning those seats maybe for 6-7 years to input anything and send it. See, ultimately it is like key to a treasure. So somebody should have independently verified on a day-to-day basis all the SWIFT messages, which would have stalled the fraud on day one itself.
Mr. Gandhi, this SWIFT being, talking to this core banking or being integrated with the core banking, was this never made mandatory, sir?
It is not mandatory because the different system banks will be using, and the integration depends upon the technology of the SWIFT and the bank's own technology. And as Mr. Bakshi did mention, SWIFT technology is still old. So there will be integration issues, and that's why some banks could have continued with the manual operation between their core banking system and the SWIFT system. And that is where, when manual linkages is there, that is where the checks and counter checks and controls should have been additionally there. that, as I said, that 100% concurrent audit of the messages, either on the same day or at least on the next day. That is a standard practice. We need to see, or we need to know from PNB whether they had such a practice and what happened if such a practice they had, whether they brought out or they noted this instruction, or is it 100 instead of 100% were they doing on a sample basis? So those kind of things will have to be looked into.
Mr. Gandhi, this is Vishwanath here. I just wanted to get this clarified, because it's been going on for a very long time. At least what Punjab National Bank said is that the first such transaction would have happened sometime in 2011, and it's been going on for about 6-7 years now. Is it possible that at such a large institution with so many people working at the bank, is it possible that without anybody's knowledge, two people could completely game the system and could have been conducting these transactions during their time at the bank? It only came out after one of them actually retired. So.
See, as I understand from the news reports, that these LOUs were issued for validity of 1 year. That means that in a whole year, only once such a transaction had taken place. And if it is for several such things also, possibly a few LOUs might have been issued. So that on a single day or how many days, we do not know. Right now, there is no such information. So it could be a coincidence that on those days, you can see, you can imagine that these two officials had in hands in glove with the concurrent auditor also. That way, theoretically, one can build on the linkages and failure to one another. But we need to be checking, because these are all standard procedures, standard checks and counterbalances, and whether it was effective, that need to be checked through the probing.
All right. Mr. Gandhi, Mr. Bakshi, just 1 minute. I'm going to come back to this discussion, but I want to go back to Vishwanath, because I think, one aspect is to try and understand what happened. And I think only over time, once the investigations are complete, we'll know exactly what happened. The second aspect is to understand what happens from here on for the banks and who takes this liability. And that's the debate that's been going on. Vishwanath, what have we picked up on that?
So as far as liabilities go, now what various banks and, former bankers, there are experts in this matter who have all spoken to BloombergQuint, and what they've suggested is that essentially the money was credited because of an LOU that came out of Punjab National Bank. It was given to a Punjab National Bank Nostro account, and they have been repaid. The amount has been repaid in time over these many years. So essentially, the liability of repaying these banks lies on Punjab National Bank. But on its part, Punjab National Bank had a press conference earlier today wherein they say that they will honor all bona fide commitments. Now, we're not sure what they mean by bona fide commitments, what the management said is that after the investigations are completed, they would sort of come to know, what exactly are the commitments that the bank has to honor, what portion they will have to pay. Remember, there's also this point that Nirav Modi, on his part, has offered to sell his flagship brand and try to repay some 6,500 odd crore. If, say, this sale goes through and that money actually comes to the bank, then to that extent, the liabilities do go down. But after that, what remains on PNB's plate, that's something that we will have to wait and watch. But this is an important chart, because what it shows essentially is what these claims are. On the part of the other banks, banks who have extended this credit, they seem to say that PNB is fully liable to pay these amounts to the banks. They've also said that the advances have been made on PNB's LOU. So obviously this is a very clear reasoning, saying that it was a promise on PNB's part, so they have to honor it. Punjab National Bank on their part have said that there were RBI norms which were not followed by these counterparty banks. So there is some fault on their part as well. They also suspect that, and this is a part of a cautionary note that was sent out on Monday, they also suspect that there is a connivance of these other bank employees in this whole scheme, because of which people were able to get away with this.
All right. Mr. Bakshi, now explain to me this. If there is money lent based on this LOU, it shows up in some place in the bank's books as a contingent liability. Where and how does one, for instance, start to see when contingent liabilities went up for a bank?
It will not show as a contingent liability. It will show in the books of the discounting bank as a funded liability.
In the books of the discounting bank?
Not the PNB. For
PNB,
example,
it will show up nowhere.
Allahabad Bank, Hong Kong branch has discounted. It will show in their book. Their advances figure will go up.
As a funded liability?
As a funded liability.
So PNB doesn't need to show it anywhere as a contingent liability?
Needs to show, but they don't know that they've issued the LOU. As a bank, only those 2 employees know that the LOU has been issued. The bank doesn't know.
Okay. But if they knew, it would show in the contingent.
Of course, that's what I said. If it were linked to the core banking system, or even if the 2 systems were disconnected, but it was an authorized transaction, the first thing will be to pass a contra entry showing liability of the banks on account of LOUs issued.
Okay. And to your mind, there's no doubt that this is PNB's liability right now?
On the basis of LOU, yes, it is their liability, but it is a statement made on the basis of facts till now known to us.
Mr. Gandhi, as a former regulator, what would be your view that this is money that PNB needs to make good? I'm also asking because, sir, this entire thing, because the amount is so large, so many banks are involved, people are questioning, who is going to take the hit? And you don't want the entire banking system to be under that cloud. So as a former regulator, what would you have said, sir?
See, in the system of documentary credit, it is always the LOC bank issued bank that will be responsible. The liability will be on the issuing bank, and because that is a system, and it is immaterial whether it was signed, so long as it is a genuine document issued by that bank, irrespective of the position that it was fraudulently issued by its employees. That difference will not fit in. It will the bank which will be responsible. That is number 1. Number 2, if they claim that the LOUs were issued for 1 year, whereas the Reserve Bank's rulings regulation require that it can be issued only for 90 days, that on that basis, the issuing bank cannot renege on its responsibility. That if at all the discounting bank has violated RBI norm, for that regulatory action could be there against that bank for that violation. But for that, on that count, the issuing bank cannot renege on its liability. That is the second point. Third point, if this was not issued by PNB, in that case, the ab initio, there is no the authentic issuance on the part of the PNB. Some other document was presented to the discounting bank. In that case, the PNB will not be responsible and the discounting bank will be responsible. Here, it looks like that PNB has already admitted that the bank or the employees of the bank had issued that. So that I would think that it is the responsibility of the PNB.
Also, this question about when exactly is this, this liability going to mature? Because is it that because there is an investigation going on, so you wait till that investigation ends, or is it that there is a specific date that is mentioned in the LOU, which is when the bank is supposed to, the foreign bank is supposed to get its repayment? That is when it's due. What is the timeline looking like?
Timeline is based on the liability gets crystallized when the other party invokes the guarantee, because it's a kind of guarantee. So they should invoke. If they would invoke, then that's the time it crystallizes. Until that time, it doesn't.
Okay, so in this case, I think banks have told us that they already
banks have told us that they've already placed their claims with Punjab National Bank. So, obviously that's already happened, and now it's up to PNB as to when they're going to settle this.
Mr. Bakshi, the other thing I want to understand is, what is the comfort around this whole buyer's credit as an instrument? I believe it's not very common in other markets. It's a very Indian phenomenon.
That's a question I would not like to comment, because there are so many countries and so many practices. But this is ultimately they are called variedly in different countries. It can be called LOU, it can be called SBLC, it can be called any instrument of guarantee issued by a bank to arrange funding for an Indian corporate in other markets. So you are diversifying basically the sources of funding for the Indian corporates who are importing things into India. Many times the Indian corporates resort to it because the funding abroad is cheaper, and they can get, say for example, 1 year credit from the supplier provided he gets paid off. Now, suppose the interest rate there is total 3%. In India, it is 11%. So, he is getting an 8% benefit. This person, rather than taking a loan today and paying 11%, he says, I will pay the supplier through arranging buyer's credit, and the supplier is also happy, and ultimately the interest cost on the system is only 3%. So, there are a number of Indian importers who resort to it for 3 years buyer credit. After that, they may convert it into a loan.
Okay.
If it is a project loan, if it is working capital finance, then also there are people. And the only thing is, in the normal course, such buyer's credit or LOU will be issued for limits set up for the customer on due diligence having been done, credit being appraised, and due securities being taken depending on your turnover. Now, in this case, because there was nothing like that, it was fraudulent, it has gone haywire. Other 1.7 billion would not be justified by any turnover the company was doing. And there were no securities, no documentation, nothing, no evaluation.
Mr. Bakshi, this is also not probably the first time that a gems and jewelry account has seen some action. In the past, we've seen Winsome Diamonds pretty much similar, wherein these LOUs were invoked, and then the domestic banks had to shell out that money. Is it sector specific, this risk that happens, or is it just because of the nature of the product?
I'll come to the sector, but first thing is this transaction you have to separate from any, because this in Winsome it was a credit risk. It was evaluated limits given to them under which the whatever transactions were being done, but they defaulted. They said they have incurred huge derivative losses in Dubai and all, maybe fraudulently they said that, and they escaped from here. So they did not pay against due credit limits which were extended to them. In this case, these transactions are not originated by the bank. It's not a credit fraud. It's an operational risk fraud which has happened. But having said that, gems and jewelry is a tricky business because of many reasons. Number one, there are very few families or particular communities which are into it. Right. Number two, assessment of the value of those diamonds or taking stock of those is not easy. And they are very small items having large values, and they are done the shipments also through airway bills and courier packets and things like that. Of course, in this case, it's nothing to do with diamond. It could have been any other commodity.
Yeah.
Okay. Mr. Gandhi, I just want to come back to that point on buyer's credit. So what has been the RBI's perspective on this? Is there, been some sort of regulatory changes in the thinking? I think your former colleague, Mr. Khan, was speaking to us earlier today, and he suggested that some global regulators are not that comfortable with this concept of a buyer's credit, sir.
Yeah, there's a documentary credit, especially for cross-border transaction, that has always been issue from the perspective of the risk that the banks are being exposed. So different countries, but there are certain international conventions which have been are being followed for easy way of doing business. So that's why there is a balance or a trade-off between the full security vis-a-vis the convenience of international trade. So in that process, sometimes some people try to take extra advantage of the system. So continuously, yes, this is being discussed in international fora. That is definitely there. There are certain countries which want to tighten it. There are others who depend upon international trade. They want to go a little bit soft on that. So by international agreement or consensus on completely tightening, and I think it's a difficult process. It is not going to be easy. That's why some countries take extra precautions from their side.
Just one last question each before we close the show. Mr. Gandhi, I'll stay with you. If, every crisis throws up some learnings. If there was one thing, one obvious lacuna that this, at least so far, what we know about this crisis has thrown up and needs to be plugged, what would it be to your mind? Is it the linking of SWIFT with core banking or something else, Mr. Gandhi?
Yeah, by linking, as I said, it's a technical issue. If technically certain things are incompatible, there is no way of connecting it. You have to depend on a manual interface. The moment there is a manual interface, automatically there should be extra steps of security. That is what my independent way of checking it out and ensuring that the required processes have been followed. So that will have to be required to be followed. That's with reference to the SWIFT related interface. That's one. The second, in terms of contingent liabilities like this, so this is ever a risk-prone area. That is where again internal auditing mechanism, periodic checking, that will also have to be there. But the keeping complete record of the contingent liabilities taken by the bank, that is where ab initio, the first person himself had not put it in that books properly, then these kind of things would happen. So perhaps we have to think about, again, it is difficult because it involves another bank in another country. Your regulation, how far it will apply to them, I'm not very clear. But the system of confirming after a facility has been given or after a discount has been done or about to be done by one bank, should that bank be reporting to the issuing bank and getting cross confirmation? I think something like that we may have to think about.
All right, Mr. Bakshi, last word to you. What would be some of the...
So, I endorse what Gandhiji has said. And the other thing is, in the whole maze of risk management and Basel III and capital risk weights and all, we have forgotten the chain of transactions that happen at the grassroots level. So any weak links in the chain must be plugged. For example, in this case, non-verification of these SWIFT messages, which were a key to the treasury almost, I should say, were not being checked. So these type of gaps in the systems must be plugged, and independent, whether concurrent auditor does it or another officer of the bank does it, these things must be definitely done.
I know, it's ironic that some of these large scams end up being very simple in the way they actually done, which is shocking. Mr. Gandhi, Mr. Bakshi, very kind of you to speak to us today. This is BloombergQuint. We were trying to explain what we know of the PNB fraud. Thanks so much for watching.